Welcome to ByteCrypto Academy. In this quick video, I'll break down 3 beginner-friendly trading strategies you can start using today. No complex charts, no experience needed. Let's dive in shortly. Let's kick things off with the classic HODLing. It stands for Hold On for Dear Life. It's simple. You buy a solid cryptocurrency like Bitcoin or Ethereum and hold it long-term, no matter the short-term price swings. Think of it like investing in gold or real estate, but digital. It's easy. You don't need to read charts. You just need patience, belief in the project, and the ability to ignore short-term panic. Example, you buy 1 Bitcoin at $60,000. 2 years later, it's worth $100,000. You sell. That's a $40,000 gain without lifting a finger. This strategy is all about patience and belief in the tech. But remember, only HODL coins with strong fundamentals. Avoid meme coins or hype tokens unless you're ready to gamble. Next up is dollar cost averaging, or DCA. This strategy is all about consistency. Instead of dumping all your money in at once, you invest small amounts at regular intervals, like $10 every week. Why is this powerful? Because you're not trying to time the market. You're just steadily building your position, regardless of price swings. Let's say you invest $20 every Monday into Ethereum. Some weeks, ETH is high, you buy less. Some weeks it's low, you buy more. Over time, you average out your buying cost, reducing the risk of buying at the top. It's stress-free and beginner-friendly. And best of all, you can automate it on platforms like BingX. All right, now let's talk about a more active strategy, breakout trading. This method helps you spot big price moves before they happen by reading simple chart patterns. Here's how it works. You look for a coin that's been moving in a tight range. This is called consolidation. It's kind of like shaking a soda bottle. Pressure builds up, and when it pops, boom, big move. If the price breaks above resistance, that's your signal to buy. If it drops below support, you wait. Or, for advanced traders, you might consider shorting. Example, let's say Bitcoin is stuck between $59,000 and $60,000. You place a buy order just above resistance, around $60,100. If it breaks out, the price might surge to $61K or more, and you're in early to ride the wave. Now here's the key. Watch for classic breakout patterns, like ascending triangle, higher lows squeezing against a flat resistance, bull flag, a mini downtrend after a strong move up, cup and handle, a rounded dip followed by a small pullback, double bottom, a W shape that often signals a bullish reversal. But be careful, not all breakouts are real. Fakeouts happen. That's why using a stop loss just below support is so important to protect your capital. Breakout trading can be super rewarding, but it takes practice, pattern recognition, and discipline. Bonus tip, before you risk real money, practice on a demo account. Try BingX's demo trading, perfect for beginners who want to learn safely. Even better, you can use copy trading to follow real crypto pros and learn by watching their moves. Link in the description to get exclusive bonuses when you sign up. And remember, you don't need thousands to start. Even $5 or $10 trades can teach you valuable lessons. So, which strategy are you trying first? HODL, DCA, or breakouts? Let me know in the comments. If you found this helpful, hit like, subscribe, and turn on the bell so you never miss a crypto lesson from ByteCrypto Academy. Until next time, master crypto one byte at a time.